Get cracking if you want, Kendall.
Fantastic.
I'll keep an eye on letting people in. Let's just crack on. We've got lots to go through.
Brilliant. Okay, so yes, welcome everyone and thank you for joining. I'm quite excited for this. I know a lot of you have been wanting to do your specialist finance for a while. So what we want to do is we're going to be here to help you get started with doing the advice yourself. We're still here, obviously, if you want to package it as well. But the aim is let's start it now where you can start to do your own bridging and commercial advice. Second charges, asset and invoice financing will still be packaged for now through myself, but it's a good starting point into the specialist market. So we're going to go through today a bit about the bridging and commercial itself. We've also got the guest speaker, Ryan, here as well from Lake Shield. So thank you very much. So let's just get straight started.
Is this a paying gig?
No, you're volunteering. Okay. So let's get this, share my screen. Here we go. Okay, so can you see that?
Yeah.
Perfect. Okay. So let me just close you down. There we go. Okay, so a bit of the agenda. We're just going to go through what bridging finance is, how bridging finance works, the different types of interest charged, pros and cons of bridging finance, a step-by-step guide on getting bridging finance, and then we're also going to have a little presentation from Ryan here to ask any questions and give a bit more information. Once we've done the bridging, we'll then move over to commercial. Same process. What is the commercial mortgage? How do they work? Types of them explained, pros and cons, and step by step. Then we're going to go through a quick overview on the regulations and compliance basics. We're going to go through the process, what is expected of you for giving the advice and how we're going to record that, and then just some useful resources as well. I have got together a document that has basically a route to lender. We have USPs for the bridging and commercial lenders as well, with contact details. So all of the BDMs and the contact details that I've got, you guys will have as well. So you'll have direct access. We're also going to provide you with all of the fact find documents that you need and anything that's required to make sure that you've got the whole package. You can start giving advice straight away. What I will do is if we leave questions to the end, if that's okay, if you do have any questions along the way, put it in the chat box. I'll get round to them at the end. If there are too many and I can't get round to it in the time slot we've got, then I will reply to them all in a blanket email to everyone. And as always, any questions, just give me a call or email me and I can go through that. So let's get started. So first of all, just bridging finance. So what is bridging finance? A bridge is short term. So you may have heard it being called, it's a bridge of the gap. So bridging the gap. It can be used for when you're purchasing a house and you're selling a house. If there's if you've got either delays, so you can't get that finance quick enough between each one, but you don't want to lose the purchase, you may then acquire a bridge for that short-term finance. You can also do it if there are chains involved. If there's chains and there's any collapses, the bridge may step in to help save that purchase. Can also use bridging for cash flow purposes. This is more for your investors as well. If they've got a couple of deals on the table that they want to do, they could look at getting a bridge finance instead, so they can access both of those rather than having to wait. So you can secure bridging against regulated and unregulated. The cost of these will depend, they will vary depending on the type that you're going for. It is all risk-based as well. So not two unregulated bridges will be the same, and that will be transparent when you get more into it and start to see the costs that the lenders are providing. So bridging can be arranged and completed quite quickly. We had one ourselves with Lake Shield over the August bank holiday. You guys completed within, was it 4 working days, Ryan? 4 or 5? Start to finish. So it can be used very, very quickly. They're quite often used for auction purchases. My main advice with auction purchases is please make sure from the very beginning you're aware of their timeline and when they started that that motion. Bridges don't always have to be used for auction. You can do an auction purchase without one, but again, find out those timelines, find out what their costs are, and then the bridging finance may be the suitable option. The main thing to consider with bridging finance is the exit. The exit is everything, and it will be your most important question to your clients. It is your responsibility to ensure that you can exit the client from the bridge finance. If you fail to prepare and advise on the solid exit, the client can have substantial penalties, and you as a broker could also face that as well. Worst case scenario from the broker perspective, it will be marked as poor advice and you could be removed from panel. You do not want that black dot against you, and just always make sure you've got a viable exit. You can also, and I know with a few of you that I've worked with you with your clients, although we have one exit planned, we will have a backup exit as well. So worst case scenario, if we get to that 6-month window and the first exit isn't looking viable, we will then switch onto the backup exit. So how does bridging finance work? It's typical to a standard mortgage. There will be thorough underwriting, and this is normally done up front. It's to make sure that it is the most cost-effective and suitable solution for the client. Sometimes you'll have clients that hear about bridging finance and say, yeah, it's quick money, I want it straight away. We may be able to get around bridging, so it's not always the most appropriate, and that's what we need to find out day one. So it can be secured against different types of security. So you can do residential property, commercial businesses, or even land, and that is land with or without planning. The rates will differ depending on that. It's your responsibility to package the case up front. You are essentially going to the lender, putting a case together and convincing them why they should be funding this deal. So your relationships with the BDMs and the lenders in total will be imperative here for negotiations. You can negotiate fees, you can negotiate timescales, you can negotiate the proc fees that you earn. Having a good BDM is your lifeline. So make sure you use them, and to help with that, by giving them as much information as you can up front and understanding which lender needs a case packaged a certain way will really help you in those negotiations as well. So valuations, you'll get a valuation on the property as well. As standard, if the lenders can do an automatic valuation, they will do. We do have a system as well, which I'll provide you in the guide after, that you can go on and do your own AVM to make sure that the AVM that comes back is in line with what you need it to be. If the AVM comes back and it's not ideal, then we would then need to go for the physical valuation. The lenders will try to do an AVM as much as possible. It's cheaper for your client and it's much more quicker as well than sending out a valuer. So the valuations will be instructed by the lender. The clients will be responsible for this, and they will cost up front. And they quite often, we've had it as quick where the underwriting started on the Monday and the valuation was booked and done by the Tuesday. So it is very, very quick. Interest rates for bridging, they do range. They range from about 0.6% is the lowest I've seen it for a while, and they go up. The highest I've had is 1.5% a month, and that was for a residential, so a regulated bridge. So they do vary in between. The risk appetite is depending on the deal. So unlike a normal mortgage, you may be able to log on to Nationwide's product guide and see what type of asset it is, what deal it is, and what they're going to charge. Bridging and commercial is slightly different. It's a bespoke product for a bespoke lending scenario. So not all two will be the same. And again, this is where your relationships with the BDMs will really come into play, because you can then try to negotiate the best deal for your client. Interest rates. So there are 3 different ways that interest is charged on a bridge. There's retained, serviced, and rolled. Retained is your most common. So the interest will be calculated day one. This will then be deducted from the gross loan up front. It will reduce the amount the client can have on their day one. However, it does allow the clients to have the security that they don't have monthly payments. So as an example, if the gross loan available was 300,000, you would then have a list of fees and the interest that's calculated. If they're taking the bridge over 12 months, let's say 1%, then that will be 1% of the balance every month. That will get deducted from the gross loan day one, leaving you with a net loan. So when you get your terms, there's two figures you will see, the gross loan and the net. The net is what your client is getting day one. That's the main focus for the client. For you as an advisor, you need to focus on the gross loan because that is the amount that you're going to have to generate to repay the loan entirely at the end. So retained is your most common type of bridge, but it will give you slightly less upfront. You've then got serviced. So this option is the most similar to a standard mortgage. The client will receive the net day one figure and they will have monthly payments to repay this service. So this is most linked to a standard mortgage. It can mean that they can have slightly more upfront. A lot of lenders will ask when you're getting your terms, they'll say, how do you want this serviced? So whenever I send deals to Ryan, for example, I'll state this is normally a retained, or can we have this one as a serviced one, please? If you need as much day one, find out from your client what their goal is. If they need every penny they can day one, then make that clear and you'll reiterate that to the lender. The third option is rolled. So this isn't as common. Not every lender will offer this. There's only a few lenders out there that will offer this. But the interest will be charged each month and rolled up. So is what it says on the tin. It's rolled up throughout the term and it's added on at the end. So this will be added on to the total. It will increase the total sum. You will be able to know day one how much interest will be accrued throughout this term. So you know if they're keeping it for 12 months, after the 12 months, we're going to add, for example, £10,000 worth of interest. We've got to raise that gross amount. So this option will allow the client to receive more cash on a day one basis. A solid exit plan is required for this, as the total borrowing could increase significantly. Again, not many lenders will offer this, but it is a way. Quite often we'll have clients where they want as much money day one with no monthly payments. Rolled may be the alternative solution for them. Again, it's finding out from those lenders who will offer it and how they're going to structure it. So having the A team, as I call it. So bridging is very high risk. It is often misadvised. Quite a lot of brokers will see it as, we're going to give you this mortgage, we're going to give you this loan. We're going to get a very good prop fee from it and good luck. That's not how we advise on bridging finance. We need to make sure that we are, whether it's regulated or unregulated, that it is the best option for the client. So whether you're arranging a regulated loan or unregulated, the advice you give today will impact the client. It's not a standard mortgage and we can't afford for delays or information to fall through the gap. Therefore, it's imperative that you have that right team around you. That's the right lender for you, which again will help with the BDMs, the right solicitors in place, the right valuers. If you're recommending someone to go out and do the cost of works for them, it's making sure everyone is on the same page, especially with an auction. If you're working to a very small tight deadline, you need to make sure that everyone has capacity to work within that period. Quite often we will find that the client has had a fantastic solicitor for their residential purchase and even helped them with a buy-to-let. We ask them what they're doing for their bridging finance and they're using the same solicitor. Do not be afraid or shy to ask that solicitor, do you have experience working with bridging? We've seen it time and time again where solicitors will take on the case. They're not used to the tight deadlines and the volume of information being asked of them day one, so they cower away from it because they don't know how to handle it. We cannot afford for that. So sometimes it's just having that brutal conversation with the client from the beginning. Who is your solicitor? Do they have experience? Do they have capacity? If we're about to go into a busy period with Christmas, when are they going to be off? Are they able to handle this? A lot of the lenders will lead on their rates to try and win your business. With bridging finance, rate is the least of the concern. It's important to make sure you're getting the best deal for your client, but your clients aren't securing bridge to save money. They need it because it's urgent. Therefore, the leading focus should be around timescales and who can accurately complete the deal within that period that we need. How quick can the lender underwrite your deal and provide credit back terms? And that's something you can ask the client, the lender straight away. What is their SLA times? How quick can evaluation be done? Do you have direct access to the underwriter? Quite often with the lenders, you will be given a team up front. So you will have the BDM, who is your lifesaver. They'll be able to push it through for you. You've got the underwriter and you've got the solicitors all in the same email trail. It's making sure that we can get that from inquiry to completion as quick as possible. Touching on the solicitor, I've briefly mentioned that they're having the experienced short-term finance solicitor is imperative. Quite often the lenders will offer dual representation. If it's offered, I will always recommend this to the clients for a bridging finance. So dual representation, the lender will have their own solicitor and they'll use the same solicitor to act for your client as well. It speeds everything up. You're then chasing one person and one person only, and it's also a lot cheaper for the client. Now, the biggest misconception when it comes to legal fees with bridging finance, unlike a normal mortgage, the client is responsible for all costs. They are responsible for their valuation, they're responsible for their solicitor fees, and they are also responsible for the lender's solicitor fees. If you want to go for sole representation, that's fine. They can have their solicitor and the lender can have theirs, but you will still be responsible for the lender's solicitor costs. Therefore, dual representation can dramatically reduce that amount. Moving on to the terms for bridging loans. So bridging loans, as we said, are short term. You can start from a 1-month term and you can go all the way up to 24 months. You can also re-bridge a bridge if needed. So if you take it for 12 months and for some reason there's been delays in the construction or the costs have gone up and you need to extend that slightly, we can look to re-bridge it. It's not the ideal solution. So if a client says, that's fine, I'm doing a standard refurb, I can get that done within 3 months. Let's be safe and get a few more months added on top. Quite often we will see them go for a 12-month term. If the exit is going to be sale, I would always advise to check in around the 6-month mark, the 6-month period. If the property still is not on the market by this point, doesn't yet have viewings and there's no real steer into the right direction of it being sold anytime soon, around that 6-month period is when I would start to implement the backup, which would probably be the refinance. Having that 12-month term gives the client comfortability that they've got 12 months to act on it. But as we all know, 12 months can go by very, very quickly. Especially now we're going into the busiest time of the year with Christmas and a lot of holidays, managing them expectations, and especially if they're doing developments or if they're any construction that's relying on third parties coming into Christmas, it's making clear that actually realistically they're probably going to lose about 4 to 6 weeks worth of active working time. So we need to make sure we've got the right months there. If the clients can't repay the debt at the end of the term, you can re-bridge it. It is quite costly as it's showing the new lender that the client has been unable to plan for their agreed exit. So therefore you can expect a much higher rate. Legal fees, we have touched on that. So the client is responsible for their own fees and their lender's fees as well. So the pros and cons of bridging. So pros is you have quick access to funds, as quick as 4 days in some cases. The pro is you can avoid losing out on purchasing a property while their current asset is in the middle of a sale. Cash flow purposes, if you need this for business purposes, you can do that. It's to release funds during a development if you've run out of money, or even, as we said at the very beginning, if you're a buy-to-let investor and you've got 2 properties on the market that you'd like to purchase, you can only have the cash for one of them. Bridging finance may be able to help to get both underway. So you can purchase cheap, refurb, refinance, and the extract cash. With bridging finance, with most mortgages, you normally have that 6-month rule that normally once you purchase, the lenders won't let you refinance on the new market value within about a 6-month period. Bridging is different. It is clear it's important very beginning to make sure that the lender you're looking to refinance with is aware that it's a bridge and that they will use the market value. Touching on the cons, there can be large upfront costs day one. If there's no exit strategy, it could be quite costly, and complexities arise on the exit strategy. This is high risk with development finance. It's making sure with development that you are checking in quite often. The lender will also be checking in with development in very regular periods, but it's also your time to manage expectations as to how realistic it is that this is going to complete in time. If not, we must implement that backup exit strategy. Touching on the fees. So you'll have an arrangement fee. It's typically 2%. Normally with the arrangement fee, you'll have about 1% to 1.5%, depending on the lender, will be paid back to you as a proc fee. Interest. You've got the valuation fee that's paid up front. Again, if we can do an AVM, we would recommend to do the AVM. You've got the legal fees. Some lenders have an exit fee, so be careful to look out for that in your heads of terms. And then there's normally a minimum interest period as well. Typically, a lot of lenders will say we have a 3-month interest period. It's seen as linking it back to a normal mortgage. It's basically an ERC. So we just want to make sure how early can they leave it and what's it going to cost the client to leave. Touching on proc fees, the lender typically charges 2% arrangement fee, of which 1% of this will be paid to you as a proc. You can raise the proc fee to increase your earnings. However, be aware the more you charge, the lower the total loan the client will get. This is normally deducted from the gross. So if you're charging with lenders like Together, for example, everything will be deducted upfront. So the more you charge, the less the client will get upfront. So it's also always making sure that you're treating customers fairly, and just keep on top of that. Some lenders like Together will deduct it all up front. Other lenders will just add it as well. But it's just be very, very clear with the client how you're charging and where we're charging that. If you wish to charge a separate advice fee, we will monitor this. It cannot exceed 2% of the total borrowing. The earning potential of bridging can be quite substantial. However, you must always act within the client's best interest and ensure the fees you are charging are fair and reflective of the work involved. Is it fair to charge a 2% for very little work? We'll need to keep an eye on that. So do be very careful. A lot of bad advice has happened around bridging finance with previous brokers across the industry. So we will keep an eye on that. We will monitor all fees being charged for bridging and commercial cases when that's being submitted. So just be careful with the proc fees. Moving on to step-by-step guide, how it works. So first of all, understand the client's needs and establishing that exit plan. Collect all the financial information and property details. This is your standard KYC, getting the case ready for submission. And if you need to do land registry searches, this is when you would do that. You choose the lenders suitable for the client and the loan type. You then submit the application with any supporting documents. With bridging finance, try not to be too helpful. If the lender hasn't asked for it, you don't need to give it. What you need for compliance is one thing, and what the lender will ask is another. So we advise to get all of your KYC up front that you need for compliance, and then drip feed the lender as and when they ask for it. Like a lot of the deals we'll see especially with second charges and commercial, once a lender sees something, they can't unsee it. So if the lender hasn't asked for it, please don't provide it. Property valuation and lender checks. This will be done from the lender. If you are doing your own home track, which we discussed earlier, just upload that to your portal as well to show that you've done your due diligence. The legal work will start and the contracts will start to be prepared. That will be done as early as possible. As soon as the fee is paid, the solicitors will start straight away. Once all underwriting has been completed, valuation done, the funds will be released and the client will then manage their exit strategy. You will also help to manage that as well. And that will be clearly noted in your suitability letters as well, how they're going to exit and as and when you're going to have those touch points with the clients. So just quickly on who regulates bridging. So you have both regulated and unregulated bridging. So regulated bridging loans is for properties where the client or family have resided in. It's overseen by the FCA, so you are regulated directly for this, and extra consumer protections under MCOB. Unregulated bridging loans, this is for buy-to-let or commercial. This isn't covered by the FCA, but you must still act ethically, always treating the customers fairly. Always check if the case is regulated. If unsure, just give me a call. Quite often we will have the client say, yeah, that's fine, we've never lived in there, it's nothing to do with us at all. When you actually do some digging on it, it's technically a regulated purchase. It may not be necessarily because of who has lived in there already. It's also you've got to monitor where the funds are going. If the funds are going for a regulated purpose, does that then make it regulated? So we just need to keep an eye on that. Any questions, just give me a call. I'm going to hand over now to yourself, Ryan, to do your section, if that's okay.
Amazing, yeah. Hopefully it's as invigorating as yours was.
Thank you very much. I'll take that.
Oh, do I not get a PowerPoint? Okay.
No.
Oh, sorry. Hi, guys. Hope you're all right. Feel free to get mics off on my bit. I'm a bit more social than Kendall is. But I just want to, first of all, talk through how to package the case ideally to make your lives easier, but also not giving too much like what Kendall touched on before. Don't give too much information that you're shooting yourself in the foot, but also to flag anything that's worth flagging at the start and providing a solid package to make sure it doesn't cause any delays during the journey. This might be worth taking some notes on. I won't go too fast, but I am northern, so it's not going to be slow. But I'll go through it step by step. So your basic things, when you're sending a case over, you want to cover things. I expect most you would think address, of course, whether it's a purchase or a refinance or a cap raise, credit and affordability. But there's a few more little pieces that are worth putting in there day one just to make sure that you get the right answer, because sometimes a lender might say yes, but they don't know something. It'll get close to completion, something will come out, it'll cause a problem when you could have just taken it to another lender and been upfront that will do it. Or they'll say no to a deal they could have done just because they don't understand it. Or so we want to really get that down for you at the start to make sure you succeed day one. So I'm actually using my my sales note. Oh, bear with me. Good timing for my family to come home. So I'm actually using my sales note that I would send to the credit committee. So you're getting that first-hand information. So you know what to provide and what not to offer to the lender day one. So first thing on my sales note is, of course, asset class. Is it residential? Is it commercial? Is it semi-commercial? Is it land? Give a bit more details on that if you can, if it's a care home, if it's retail, if it's a pub. So I would usually do a category and then a subcategory. So if it's commercial, it's a warehouse. It could be semi-commercial with a retail at the bottom and a flat above. That's what you want to touch on with your asset class. Second thing would be what the charge is. You really want to spell it out for a lender, because there might already be an outstanding mortgage and you're doing a second, or there might be an outstanding mortgage that the bridge is paying off. You're taking it out and you're doing a first. But that really needs to be stipulated day one so the lender knows how to act, how to price accordingly. You don't want to give a quote to your client and it's incorrect. So the second one would be first or second charge. Third one, you'd be surprised how much this has missed off. Kendall, I'm looking at you. Address. So full address and postcode is really helpful. And if you have any add-ons to that, a listing, if it's a purchase or if it's a refinance or a cap raise, some up-to-date photos. or a video walkthrough, just whatever the client has. But a lender wants to see the property because, again, you might get a misquote. They assume the property's fine. It's not. It's been taken back to a shell, or they think it's in an excellent condition. It's not, or they think it's in a terrible condition, and it's not. It's just been refurbed, but they're not aware. They're basing it off an old Rightmove link. So full address and anything to back up where it's at for a lender to really see it and digest the deal. Fourth thing, again, gets missed off a lot. Most of the time it is just assumption work from a lender to avoid delays, but it makes the life a lot easier, whether it's freehold or leasehold. The standard thing would be if it's a house, it's freehold. If it's a flat, it's leasehold. But we all know that's not always how it is. You get Tyneside freeholds that are actually leaseholds, and one apartment owns the others. Yeah, freehold or leasehold, please. Description of the asset doesn't have to be War and Peace. 2-bed mid-terrace, 3-bed semi-detached. If it's commercial, retail unit, operating as a carpet shop, with 2 one-bedroom flats above. That's all it has to be, just so they know in their head what it is and how to work the deal based on their product criteria. This is one I'd never get, but in my experience, it's not something I would think about either, but it does help. Some brokers do it normally, most don't. But size of asset and square footage, because that helps the lender understand what the title is, what's included, how much they're lending on. Is it mortgageable? I've had so many flats in London that were be dramatic 1 square foot, but they want a buy-to-let mortgage. There is a threshold, so just including that square footage, or if it's a warehouse, lenders want to know what the square footage is so they can understand the size of the asset. That's something good to have in there. Again, as much as you might think, as Kensal touched on before, if it's regulated or unregulated, the lender does want to make their own decision. So they would want to know if the borrower or the family members live there or have lived there. The way the regulation works, it's kind of like a flow chart. So depending on how one question is answered depends on how the next question is asked. But it's good to know. It doesn't necessarily mean it's regulated if family do live there or have lived there, but it's always good to flag that day one so the lender can make an informed decision. One very important one is use of funds. So if it's a purchase, of course, it's the purchase. But if it's a refinance or a capital raise or a second charge, they need to know what the use of funds is, again, to determine regulation and to make sure they're happy with that use of funds. I'll give you an interesting example. There was a cap raise, didn't tell me use of funds, gave me a great story about it. I got terms, I took it back, and at that point he decided to tell me they were paying an ethical hacker to hack back some cryptocurrency it had stolen. You think you've heard it all. I've got all the stories, but yeah, flag it. Exit strategy, whether it's sale, whether it's refinance. If you are doing a refinance, try and get a dip prior to submitting it for a bridge. Most lenders will just give you a decision in principle or an AIP. It depends what lender you go to. Just to show it, as much as we all know it's not worth the paper it's written on at that point, that will give the lender security to be confident in the exit strategy. If it's sale, just a little bit of what the process will be, what estate agents to go into, what they think they'll get for it, if they've got any comparables. It doesn't have to be War and Peace, but the more you give, the better it'll be. Borrower information, including any adverse. So how is the credit? What do they do for a job? Have they got any experience in flips? Have they got any experience in developments? Have they been in the paper for fraud? Flag it if we could find out about it. It's always good just to let us know day one. It doesn't necessarily mean there'll be a problem. I've had a couple of clients that have been in the newspaper, but we still lent to them because it still fell within our criteria. What you would be charging as well. So we need to know this day one for the quote, because if we give you the quote and you don't read it because you're too busy or you just assume it's okay, you give it to the client to read. and then it comes back and you say, actually, Ryan, can you put a 1% broker fee on top of my proc? Well, then you'll have to go back and resell that to the client because they're getting a 1% less than what they were getting. So let us know what you're expecting to be paid, how you're going about that, and what you want from us. Any additional information? Newspaper articles, I'll touch on that again. Is it their fourth rebridge? Are they overseas? Just anything out the ordinary. It won't necessarily kill a deal, but you'll find the more upfront you are about certain quirks, the better it'll be. And it's better to have this conversation with your BDM day one than it is to have this conversation with an underwriter further down the line. Because as Kendall said, once a lender is aware of something, they can't unsee it. Whereas a BDM will use their day one analysis to understand how to structure the deal to make it fit the underwriter. So it's better to, that's why it's important to build relationships with your BDMs and make sure that you have that personal touch. You can stay in touch. You can talk to each other. They'll always pick up the phone to you, and you can ask these questions as well. It doesn't necessarily have to be about a case, but before you send it, you could say, in this scenario, how would this work? Could it work? Will it work? Should I take it elsewhere? Market value and purchase price, please include both if you can. I find a lot of the time on a purchase, so most lenders will lend on whatever's lower on a purchase, either the purchase price or the market value. It could be worth 200, but if you're buying it for 150, the lender will base the lending off the 159 out of 10 times. I do get brokers that try and just tell me the market value, or they just give me a figure, which I would then assume as the purchase price. I'll provide a quote, and then they'll come back and tell me they're actually buying it 50 grand less, and then you're having to redo the work again. So it's pointless. Tell us both that it's worth 200, they're buying it for 150. It's BMV, it's fine. Just let us know day one so lenders can quote accurately. Valuations, if, for example, the case has been let down, Kendall, you know as well as anybody, we do this a lot, we save deals. If your case has been let down elsewhere, but they've got right to the end, they've already paid for a valuation, let us know. Let us know you have a valuation on file, because rather than getting a new valuation, making them pay for everything all over again, 9 times out of 10 we can get a rewrite or a readdress, which saves the client money. But you will find that valuations have to be in the name of the lender that's providing the finance. So if you do have a valuation, provide it, or let us know the figures, or I would prefer it be provided, because then I could have a good scour of it and make sure there's nothing untoward that'll slow it down at the end. Timings. Is it an auction purchase that's got 28 days? Has it been let down at the last minute and needs to fund in a week? Is it a quick cash sale, which bridging can be used for because they're getting it at lower value? Or is it just they have 3 months to do a cap raise for an ongoing project in the business? Retained serviced as well, please let us know, as Kendall mentioned before. So are they looking to service it, looking to retain it? And the way I go about this with my own direct clients is, what's important to you? Is it cash flow or is it capital? If the cash flow is important to you, but you have the capital, retained makes more sense because you're not making the monthly payments. If cash flow is less important and capital is more important, you want more day one, but you're happy to service it, then service would make more sense. But those are the key things. The 4 key things I would say is credit, affordability if it's serviced, use of funds, and exit strategy. They would be your absolute bare bones minimum, but you're going to find it's going to take longer if you only provide less.
Thank you very much. What I will send as well is I have a very brief summary of what I send to the lenders. So it's got those pinpoint bits of information that the lender needs to be able to get some credit back terms. I'll send that across to everyone as well, so you know this is how we draft the email. Again, not giving too much up front. Touching on the value, it's important to note the client's expectation for the GDV, which is the gross value after all work has been done. We've had a couple of cases where they think by putting a 15 grand renovation on the property is going to increase the property by 150k. I'd love to see that type of property, but again, it's being realistic with those expectations. It's knowing, what is it worth now? What are you paying for it now? How much is it going to cost you to get the property up to scratch? And then what is the final value? So I'll send that out. The only other things to point to touch on the bridging is loan to values. I can see there's a question there from Go already with the maximum loan to value. So maximum loan to value on bridging can go up to 80%, depending on whether it's regulated or unregulated and depending on the lender. A typical loan to value is around 75%. So 75%, and then lenders like Together, for example, if they deduct everything up front, they'll do it on the gross amount. So you may be maximum 70% or 75% gross, and that's taking in all of the fees, your broker fees, every cost involved will then deduct that. So it's making sure that as a general rule of thumb, you're looking at around 75% loan to value on a bridge, but it's making the clients aware, depending on the type of deal that they're going to get, depending on the type of interest, that will then depend on how that is structured.
Someone's mute come off.
Someone's mute's come off. There we go. Okay, so just going to touch now on the commercial. Let me share my screen again. So now moving on to commercial mortgages. So what is a commercial mortgage? It's a long-term loan for buying or refinancing commercial property. This can be 100% commercial, like a hotel, a pub, an industrial estate, or it can also be semi-commercial, where you own both the commercial down the bottom. You could maybe have a cafe, and then you may also own the flats above. If it's all depending on how the title is done and depending on the current lending, that may come under a commercial mortgage as opposed to a semi-commercial. So again, have a look at it, and it will depend on a lot of the commercial lenders will go off of the square footage, which element is bigger. If it's more commercial led, you'll go down the commercial mortgage. If it's more residential, we may be able to squeeze it on a standard semi-commercial product with lenders like Lambay. So we can technically go down the buy-to-let route. So terms usually last from 3 to 25 years. You can have it with capital repayment or interest only, like a normal mortgage. It is I know a couple of you, I've been doing some commercial deals with you, and the terms that we've been sending, it's a blanket 5-year term, that's it. There are some lenders that on a commercial basis, fully investment commercial basis, so it's a pure profitable business only, they will do it as a 5-year term only, that's it. So it's just constantly refinancing that. So yes, you can do capital or interest only repayments. It requires detailed financial information and proof of income. So with a commercial mortgage, you're going to get your normal KYC, you're going to get the affordability. You're also going to get trading accounts if they're buying it and they are renting it from themselves, essentially. You're also going to need the company full accounts, and you're going to need an asset and liability document. This, I'll give this all to you guys as part of the pack, and we'll go through it in a moment in the process. But that asset and liability document paired with your accounts is the bulk of your advice. That is what is going to structure the deal, because that's how we work on the affordability. So how do they work? So lenders assess the property value and the rental income. They also check the borrower's financial health and business accounts. They can go up to 75% of the property value. Sometimes we can go slightly higher for owner occupiers, but again, it's lender by lender. And interest rates range from about 6% up to, I've seen the highest 11, 12%, depends on the asset and the credit profile of everyone involved. Types of commercial mortgages. So you've got owner occupier mortgage. This is for a business buying a property that they will operate from. So they are going to buy a cafe that they will operate their business from. So that is owner occupier. That's when we will then, if they're purchasing it, you would want to see the trading accounts from the previous owner, because that is what the affordability is going to be based off of. You've got an investment mortgage, which is known as a pure commercial mortgage. That's for landlords buying and renting out commercial properties. So again, they're buying a shop, but they're going to have someone else come in. That's when you would charge a monthly rent, and you will need the company accounts for yourself if you're refinancing it, because you'll have the evidence of that. If you're purchasing, then you will need the AST or the agreement that you've got with those tenants. With refinance, you're switching from an existing commercial mortgage to better terms. Pretty straightforward. And then development finance is short-term loan for developing or refurbishing commercial properties. Pros and cons. The pros is you've got long repayment terms, it's ease cash flow. You can build the equity over time. You've got a variety of products to suit different business needs. And buy-to-lets can benefit from a commercial red book valuation to boost equity. There are lenders like Landbay that will do this on the buy-to-let terms. So you could benefit from a buy-to-let lender like Landbay offering, but using their commercial appetite. They'll pay a little bit more for that valuation, but because the valuation is being done on a commercial basis, so the valuer is going out and they're not looking at it as a standard property, they're looking at it as the property and the business. So that can help boost the value for what you need for your client as well. The cons are it can take a little longer to arrange. So bridging, you can be done within the quickest, I've seen 5 working days from very start to finish with everything tied in, funds released. With commercial, you're more linked to a standard mortgage term. You're looking at a quickest of about 2 months, and then it can, how long is a piece of string? Depending on how many people are involved and any downfalls that we see on normal mortgages as well. So it requires detailed financial paperwork. Again, it's the KYC, it's the income, it's their asset and liability, it's their whole portfolio, it's how is the company structured on Companies House. We need to know everything up front. Higher deposit requirements start at 25% deposit. They can go all the way up to 40% deposits needed, depending on the risk appetite of the client themselves and the property or the asset that you're buying. And you've also got early repayment fees as well. Commercial mortgages are still mortgages, so they're very similar to standard. The biggest difference from a commercial mortgage to a standard mortgage is around that asset and liability and how that business is profiting. So what's the difference between owner occupied and investment? This is your biggest question when doing commercial mortgages. Quite often you'll speak to the client and you'll say, tell me about your asset. And they'll say, well, I own X and I pay, I get this amount of rent coming in. Okay, so who's paying that rent? Is it a separate entity or is it yourselves? That's where we'll differentiate whether it's owner occupied or investment. So owner occupier, a business buys a property that it will use, for example, a bakery buying a shop. They're usually more favourable terms. With an investment, also known as a commercial buy-to-let, they're very similar. With the investment, it's purely you're buying it to operate as a landlord on a commercial property. This is higher risk because, again, you are relying on the tenant paying that income for it. Buying property to rent to another business, and lenders focus on tenant quality and rental income. So the key takeaway here is how the client plans to use that property. Again, it's really diving deep in your initial consultation with the client. We really need to understand what is the current setup, who is in there, who is paying the rent, and how do those company accounts or trading accounts look. So you'll hear this quite a lot, OpCo, PropCo. That is owner occupied. So an example of that is Mr. currently rents a lease of a shop. He pays his rent monthly, and now he has the opportunity to purchase the freehold from the owner. If he continues to run the shop from here, this will become an owner-occupied commercial mortgage, OpCo, PropCo. The income being used for affordability will now solely rely on the trading business accounts, a full business plan and wealth assessment. You may also be required to provide a CV as well. Not many lenders will go down this route, but it depends on on the digging that they do. Sometimes they may say, actually, looking at the trading accounts and the asset and liability, we just need a little bit more comfort, so we want a CV as well. For an investment basis, as an example, Mr. has purchased a retail shop for business purposes only. He will have a tenant in place and will receive monthly income. The affordability will be based off the rental income. The lender will also require an asset and liability document. I will send that as part of your due diligence anyway. What I would advise is, if the clients are buying in a limited company name, I would always get an asset and liability document filled out for the client individually as Mr. and Mrs. and also the company. Depending which way you're going to go, whether it's an investment or own occupied, you can then know which figure you're going to be using and which one you're going to be providing to the lender. So step-by-step guide to getting a commercial mortgage. Very, very standard to how you give advice on a normal mortgage. So you'll gather financials, business accounts, tax returns, and rental income. You'll have the property valuation done. With a commercial mortgage, the lender will normally instruct this for you. However, there are some lenders that will require you to do it as the broker. They will then say, we will want the valuer to be taken up from the VAS panel. So you will then have direct access to the VAS panel. You will put the details in. You will then instruct the valuation, get the quotation, and you are responsible for arranging that. The client will pay for that upfront, and be very careful when you're doing this quote, because there is a box you can tick that says that you're going to pay for it and then that you'll charge the client as a broker fee. We don't want to be doing that. Make sure that the client is paying for that upfront. You'll then prepare business plan or projections if needed. Again, if you need a CV, this will come under this section here. You'll submit the application with the supporting documents. Similar to the bridge, only provide what you've been asked for. Don't be too helpful. The lender will undertake their underwriting and their full credit checks. Assuming everything goes through, you'll then receive the mortgage offer, you'll review the terms, and then the legal work will start. You'll set up a repayment schedule and ongoing monitoring. This is where you can just make sure that the client is keeping up with the payments, making sure that especially if they're buying it for the first time, you may want to, it's just a way to keep that relationship with the clients. So you're offering more than just I'm going to help you get a commercial mortgage, then good luck, see you later. You're offering that service that you are there with them, with the journey. So what I offer my clients is we'll have regular check-ins to see how they're looking with the finance, how they're looking with taking on that property and that asset for the first time. If they need any other reach outs, so this is another way that you can boost your income as well, by having that ongoing relationship. You can check in to make sure if they're structuring their business properly. You can make recommendations to accountants that can also give you a kickback for that. You can, any service they need. I would, with your commercial and bridging clients, you want to treat it more as a very long-term relationship, always being in touch with them to see how you can help them. With the commercial mortgage in particular, once they come to you for one thing, you will notice they will try to move everything over to you. You can then look at the commercial insurances for them. We can make the referral, so you can they're getting the direct advice that they need. You are also getting an earning from that, but more importantly, it's showing the client that you're looking after them in every aspect. So looking at some real life examples and case studies, this is both commercial and bridging. So if we focus on the bridging, first of all, this is for the auction purchase. Property price that you're purchasing for is 200,000. This lender will do a maximum of 70% loan to value because of the asset itself. Maybe there's something quirky with it. Maybe there's an issue with the client's credit history, but they're only going to 70% on this one. The term, they're going to do a 6-month term. They can have 12 months, but their aim is to come off of it at 6 months, and they're going to be charged 0.9% monthly interest. Exit is to refinance with a buy-to-let mortgage. As Ryan stated, when you're exiting with a refinance, you want to be doing some evidence to make sure that they can actually refinance. If they're doing it in a very short period, so you're going to be arranging the bridge now and they're going to be refinancing very, very soon, you may want to do that simultaneously to get the AIP in place. If not, just a simple affordability calculator where there's no credit search against the client, but it shows what they can be looking at. Example 2, for a commercial mortgage, they're purchasing an office block, purchasing for 750,000. They're going up to the maximum 75% loan to value. They're going to have it over 15 years and they're going to get a 5% interest rate. That is a very good rate. There are still some like that at the moment, but most are typically 5.5 upwards. But again, it's just looking at your lenders to see who can offer what. The income for this one is stressed on the rental yield. So what they're doing is, because this is a purely investment property, they're going to take the rental income that they're getting and times it by a certain amount, very similar to your standard mortgages. So touching on regulations and compliance basics. So bridging loans can be regulated if they're residential, or unregulated if it's commercial or investment. Like we were discussing with Ryan there, that it's not always who is living in the property now, it's where the funds are being used for that can sway whether it becomes regulated or unregulated. So you've got FCA and MCOB rules will apply to the regulated bridging loans. Brokers must perform anti-money laundering and know your client checks on all clients. This is crucial, and you should be doing this with all of your clients anyway, but we especially need to be evidencing this as well. Consumer duty requires fair treatment and clear disclosures, even if the finance is unregulated. For your compliance and treating customers fairly, treat it as regulated, just to make sure that you're doing everything as you should be. And understand appointed representative versus direct FCA authorization. What this means is there are some lenders out there that you only have access to through the network. So they will make it that they'll want to know from the very beginning, are you using your AR route or are we going direct? Touching on the Ingard process now. So just want to run you through what the process will be. Again, we'll send this out for you. This is for commercial and bridging. So a lot of this you will be familiar with because you'll be doing it with your standard buy-to-let and normal mortgages at the moment anyway, but there's a few things in here that are added extras that are mandatory for bridging and commercial. So for your customer documentation, you'll have the signed terms of business, which must be uploaded. You'll have the proof of ID and proof of address, and you'll also have the anti-money laundering and PEPs and sanctions search. This must be done for every client, and this will need to be uploaded to either Dropbox or 360. I'll touch on that in a moment. If the applicant is a limited company, we need latest 3 months business bank statements. We need their bank statements for any personal income as well and transactions. And as a general rule of thumb, when you're going through those accounts, whether it's business or personal, as a rule of thumb, if there's anything, a large transaction, query it. You don't need to let the lender know unless they come to you and ask for it. But for your due diligence, just put a Word document on 360 or Dropbox saying, Mr. has a transaction on this date for 15,000. I've queried, this is what it is. Just to make sure that you are going through those accounts and making that clear from the very beginning. Proof of deposit. If it's a purchase, we need bank statement to show the funds. If it's equity from sale, we need a memorandum of sale as well. If owner occupied, obtain the last 3 years trading accounts. But if they're buying as a pure investment, obtain the latest 3 years company accounts, if they have that. If they've just set up, a note on file, just let us know. Otherwise, we will always be after those 3 years accounts. A completed asset and liability for each individual and a separate one for the limited company. This is, we will provide you with this anyway. It's branded for ours, for our network. It basically runs down all of their assets that they have as a company, all of the liabilities, any debts they have, personal or mortgaged, any secured, unsecured, and then it will show what their profit is. That's what we're really needing, especially for the commercial side. So we'll need that for every application that you do. We will also want the property portfolio on file as well. If it's a individual, pretty standard, 3 months bank statements, bank statement for the client's additional bank account. If there's savings accounts, again, making note of any large or unusual transactions. Latest 2 years as a minimum of tax calculations and overviews, making sure they correlate. By now, they should be working on their 2025 ones, and they should have these. If not, you will need to upload a note as to why you don't have these, because being October now, we would expect to have those on file. Proof of deposit and portfolio. Now, the big one to touch with research and sourcing. With your standard mortgages, you will have access to Knowledge Bank, you'll have access to 27 Tech, you'll put in the client's requirements and it will spit out every lender that will offer and what products they will offer. At the moment, we are working on it, but at the moment there isn't anything out there that operates as a system like that. The way you source for bridging and commercial is purely knowledge based, and the more you do, the more you will pick up on what lenders like and what they don't like. I will provide you with my route to lender, so it's basically an insight into my brain as to when a deal comes in, who am I going to place that with. You will pick up on that over time. At the moment, I hate using this phrase, but you will learn as you go, and that's what I'm here for. If you have a case, you're not sure where to go with it, give me a call, drop me a line. This is what I'm looking at, this is who I'm thinking of. As a general rule of thumb, most of your sourcing and researching will be done via email with your BDMs. It's picking up the phone, it's emailing them that case synopsis. This is the deal. Will you do it? If so, what will you offer? We are working on a system at the moment, which will be integrated in our new CRM system, where it is that basically 27 Tech, but for bridging and commercial. So it will be a lot easier going forward. But at the moment, the most frustrating bit with bridging and commercial advice is your sourcing and research. It's knowing who to go to, where to go to. My biggest advice is don't get too overwhelmed with all of the lenders. There are loads of lenders out there. There's private investors, there's peer-to-peer lenders, there's anyone and everyone. All you've got to do is do a LinkedIn post about bridging and you'll be bombarded. Don't get overwhelmed. Stick with the first 3 or 4 that you know will do it. Get comfortable with submitting bridging and commercial, and then once you've got the hang of it, you can start reaching out and branching with new lenders. Again, lean on me as much as you need. Kendall, I've got this case, who would you go with? I was thinking of going to this lender, but I'm not sure. What's your experience with them? Just give me a call. So research and sourcing, we want the full fact find completed with objectives and expectations, including any vulnerable customer debt cons, anything at all. Proof of exit, if refinance, again, if you can get an AIP, brilliant. If not, an affordability calculator will suffice. Commercial and bridging products can't be sourced in 360. Again, it's just making a note of who you've gone to and when, and this will be backed up in your suitability letter. Heads of terms, this is your mortgage illustration, also known as a commercial AIP. Do not share these from one lender to another. You will have, bridging lenders in particular, you will have lenders that say, well, what has another lender offered you? Send me the terms and I'll beat it. Do not send them. You are not allowed to send the terms from one lender to another. You can type and put in the email, they've offered me a rate of this amount, but don't send the terms. Touching on that, also I'll bring you back to the valuation reports as well. Unlike a normal mortgage, a valuation report is not the client's, it's not for them, it's purely for the lender. Unless you have confirmation from the lender, you are not able to share the valuation report with the client until either completion or until the lender has said, yes, you can share that up front. The reason being, especially with commercial, most fraud cases that are being done is around the valuations. They will retype the valuation report and send it in. So you are acting on behalf of the client, yes, but you're also protecting the lender as well. You are that middleman. So do not share the valuation report until you've got authorization from the lender. As a general rule of thumb, I will tell the clients, congratulations, the valuations came back at X amount. We're now ready to proceed to full application. If they ask for the valuation report, just be honest, we're unable to disclose this until completion. The lender has not yet provided it to us. We will get this at completion. Just protect yourselves a little bit. Final bit with research and sourcing is the suitability letter. So reason for recommendation, a full justification as to why the product or short-term lending has been chosen. Why have you gone for a bridging loan over a normal buy-to-let or a normal purchase, a normal mortgage, sorry. At the moment, that's being done manually, and we will send this all out for you. 360 is not currently set up for bridging and commercial products. So we are doing it on Dropbox. We will require you to set up a Dropbox for your client, send that over to myself so I can have a look at it. Anything that you need, just let me know. But at the moment, we're working on Dropbox. We do have our new CRM system, which will be coming out very shortly. And as soon as that's live, everything will be through that CRM. But we had two options. We can either wait till that CRM system is live, or we can start using Dropbox from now, which, as long as you provide access to myself, Sharon and Shannon day one, so we have access to it, then we can allow you to start doing your bridging and commercial finance immediately. Documentation, you'll have a copy of the full mortgage application. Just be aware some quirky lenders don't have an application form. They may just provide you with the heads of terms and that's your application form. Other lenders, if they have a portal, for example, Castle Trust, they have a DIP certificate, they have the full application and they have the offer. So as much as you have, upload it. If you don't have an application form, please just put a note on your 360 or on your Dropbox saying this lender does not provide an application form. So a copy of the commercial lease as well. Any other KYC documents, income, any projections you get from accountants, business bank statements, everything. A copy of the offer from the lender. If there's been any changes for a down valuation, then please put a note to the file as well. Cost of works, this is for all of your bridging cases. That should be part of your upfront analysis to the lender anyway. So you'll have that and make sure that's added to your Dropbox. And evidence of quotes for valuations. I've touched on this, but do not issue the valuation report until completion. So that is pretty much everything.
Kendall, the last page
Was there one more?
on the presentation. Probably the most important one.
I was
My
just testing to see
details.
if you were still here.
Yeah, I'm here. I've listened to everything.
Right, let me. Here we go. So professional. So, final page. Process overview. So, the first 3 cases will be packaged and signed off by myself. This will be done at pre-application stage. We can extend it if the quality is poor. Please don't be too hard on yourselves with bridging and commercial if it's your first time doing this. Use me as much as you need. Use me for any advice that you need up front. I'll be there at pre-application stage to make sure the case is ready to go through. Please allow up to 24 hours as well. Ping me. If you could put, when you send me the email, if you could put in the subject, new bridge or new commercial for submission, then I'll know to prioritize that. But yeah, anything you need. Also, you can just give me a quick call for any queries that you have. But we're there to basically ensure that we're there to support you from the very beginning to make sure that you are ready to flee the nest and start submitting without me having to query you on everything. So the next 2 cases will be packaged and signed off by myself. This is at offer stage. So you can be moved back to pre-app if the quality is poor. Again, just send that over to an email. So send it to myself and please copy in Sharon and Shannon. Or the info@Ingard, so we know that so we can all pick it up and start to assess that for you. Full sign off and case checked via normal channels with Sharon and Shannon. Each case will be paid at 50% of the net income until the full sign-off for specialist finance cases. Once you've been signed off and you're submitting all on your own and you no longer need me, your normal fees your normal splits will come into play. But at the beginning, it will be 50%. All attendees of this course will be sent out the specialist finance procedure that will need to be signed and sent back to Ingard head office. Please email info@ingard.co.uk. Some lenders only allow access direct from the network, so we will need to make sure that this is signed, returned, and then we can qualify that you are ready to go and start doing bridging and commercial. So package up into a zip folder and email it across to myself. I will then start to assess the case. If you can also do a Dropbox as well, then we can start monitoring from the very beginning. Please follow the bridging and commercial process. Very important that your case will not be checked until all documentation required is followed. So if you don't have everything, the case will not start. And please use the supplied fact find, asset and liability and suitability documents that we're going to send you. We'll also send you copies of our route to lender. I'm going to send you copies of all of the direct contacts for all of the BDMs and lenders that I've got, also some of the private peer-to-peer lenders that we use. So everything that I've got, you guys will have as well. That is pretty much everything. But most importantly, we are here to support you. So anything you need, please do give me a call. If you're not sure how to package a case, not sure what to do, not sure what to ask on your first consultation with your first bridging client, give me a call. Give me a call, pop me an email. If I can't answer the call, then I will get back to you as soon as I can. Drop me an email, and we are there to help as much as we can. So do we have
Got
any?
a couple of
Let's
questions.
do some quick fire questions.
Yeah, I've marked off, Kendall, what I've answered. So there is a couple of questions
Brilliant.
that's not. So the first one from Gull, you've already answered. Paul's asked, will we be able to build in regular checks with this new CRM?
That's a question for you, Kendall.
Yeah, Paul, do you mean compliance checks, or what was that in relation to, buddy? Hello, Paul. We'll skip that one. Go ask another question.
Paul said meeting with client.
Will we be able to build in a situation where we could say, "Oh, I need to phone you in 6 months' time. Can we check it in? Can we book it in the diary?" Yes.
Yeah, there's going to be full, so even for like PTs and stuff, so PT reminders, there's going to be a calendar system in the new CRM as well. Yeah. Gull asked another question. This was in relation to commercial mortgages, Kendall. So is lending calculated over clients' income?
So it's purely based on, it depends if it's owner occupied or commercial investment. If it's investment, it'll be based on the rent that they receive. So it's like a standard buy-to-let mortgage. They will also factor in the company accounts and how it's trading. So with an investment mortgage, we'll be looking at the main point is what rent do they receive, but also how profitable is the business. So when we look at the company accounts, what the lender does is they will look at the profit and loss statement, and then they will add in as much as they can to boost the affordability for lending purposes. So a very quick example, if they've just bought brand new, let's say one that I've had recently is they owned a trucking business. They bought a new fleet of trucks. That was a huge purchase that year. That will not be happening regularly. So they were able to disregard that and add that back in to boost the income. So in short, we need rental income with what the tenants are paying them if they have a tenant, and we need their company accounts and trading accounts.
You got another question from Peter. Is it worth to obtain the certified practitioner in specialist property finance? Brackets Walbrook.
Is it worth it? I don't have it.
Yeah, I'd agree with that. I think you can pick it all up on the commercial finance side through experience. You don't need it. It's not like a CMAP to do regulated. If you learn better from chapter and verse, maybe it is. But I also don't have any commercial finance qualifications, and
I'd
I
most
think it's
agree.
a
BDMs don't.
I'd agree as well with that.
it's a
So it's
nice
more
thing to add
practical.
on to your belt, but you don't need it to be giving advice or to be good at it. So I would say for now, no. And if it's a personal achievement that you want after, go for it. But it's not needed. It's not needed.
Anthony, you can just refer bridging and commercial. Sorry, I nearly went with buildings and contents. You can just refer. So you do that to inquiries@ingard.co.uk, and then Kendall will pick that up.
Yeah. So again, you can either the whole point of releasing this to you guys as well, so you can start doing it yourself. But if you don't want to, always happy to still refer it into myself as well, and then we can package it for you. That is it. So how do we carry out anti-money laundering checks? Is there a site? Yes, there is. So we will send that across for now. That will be integrated into the new CRM, won't it, Ryan?
It is already, yeah. So
Perfect.
that's already integrated. So it's going to be a lot easier to do these sanction search, PEPs, AML checks. It's all going to be online. It's all going to be streamlined compared to 360. So everything's all going to be integrated. If you're asking how do you do it now, Goal, there is many different sites you can do it through, but we use a site called Verify. So you can use a site like that as well. Or for PEP and sanctions, you can just use the government website, free one, on Excel and take a screenshot as well. Anthony, is it 50%? Kendall, 50% referring?
Yeah,
To Bridget
referring
Bridget.
50%. Yep. Yeah, the main thing I would advise as well is when we're referring in, we are responsible for the advice. So even though it's your client, it will always be your client. You're essentially my client. But we are responsible for the advice. So we will send the terms of business out, we'll send the fee agreement, and we'll collect fees as well. But everything will be split 50-50 with yourself.
Ryan, I've got a question for you, buddy. Just
Fire away. I love a question.
We'll leave it. We'll lean on you. What would be your one biggest key advice to anyone that's starting out in bridging, especially because there are hundreds of lenders? What would be your one key advice to all the advisors on the webinar at the moment? What would be the biggest one, would you say?
I'd say the biggest thing I learned was when I started, I thought I need to absorb as much information as possible. I need to learn it all now. I need to understand everything, regulation, underwriting process. Take, as we say up north, take a chill pill. Learn case by case, because a lot of it you think is relevant isn't relevant. But until you get a case, and you'll never see the end of it. I still think I've seen everything, then I get a surprise that I've never seen before. Learn case by case, just pick things up as you go along, and you'll remember it for next time. No two bridges are the same, so don't try and chapter and verse it. I would say lean on your support team, lean on Kendall, and just take it a step at a time. No one knows everything. I've been around the block for years. I've worked at a lot of different lenders. Everyone acts differently. Everybody's got a different opinion on the same thing. Just you'll pick it up as you go along, and be proud of what you learn, because it is a very, very hard thing to learn.
I think that's a good one to lean on. Is there's a reason why not many brokers offer specialist advice. And there's a reason why not many networks allow it either, and they try to keep it all within, is because it is niche. So this is an extra layer onto your belt, whether you are going to be giving that advice yourself, or whether you are now being able to say, this is what we're packaging, and I'm just going to learn. I've got no interest in doing the advice myself, but I now know the basics that I can start to find those clients. And when I'm speaking to a client, I now know actually that sounds more like a bridge. You can sell the very basics before you pass it over, However, we are doing this so you can create that whole round circle that you are becoming specialist advisors as well. And that's the package you're offering. So like Ryan said, be proud of that, because there's not many brokers out there that can do it or can do it well. A lot of brokers with bridging will just chuck mud at a wall and hope it sticks. We're proudly that we are not brokers like that. We will do the sourcing, we will do the research, and we will learn what the lender's like. So when, for example, when I put a deal into Lake Shield and Ryan picks it up, I know those guys will like it. I'm not just chucking it out to everyone and seeing who nibbles at it.
But how long did that take? Was it an overnight job to learn the appetite of every individual lender? Is it
Still learning now.
still
learning
learning?
now.
Still learning. But
Yeah.
yeah, I'd say as well, another thing we talk about a lot, Kendall, there's a big grey area in specialist finance. Don't try and solve the grey area. If you find yourself in the grey area, just ask for some advice. Because somebody around you will have dealt with that specific niche in the grey area before and be able to guide you.
I think that's a good thing to touch on when you're first talking to clients as well. When you're coming from a heavily regulated mortgage background, you know right from wrong. No, you can't do that. There's no way around it. When you're in the grey area, there are ways that you can do it. It is a legitimate way around it, but it's how we structure it and how we word that to make sure the case fits for the client. So again, pick up the phone, just say, Kendall, this is the situation. Can we even do it? Let me know. Just lean on us.
Question from Peter. Can a broker offer support to create a business plan for commercial mortgage application for the client and to charge for this either as an AR or as a separate service?
Don't see why not. Yeah, if you'd like to do that and you can do, then yes. Just need to make sure that doesn't come and bite you on the arse, really. So I don't know how that would be. That's more of a Ryan thing with a compliance enable.
I would say that's cool, but again, you don't want to bite you on the arse. You don't want the deal to fall down because of the business plan you've helped create. So it depends how confident you are and if you have a backup if it does bite you on the arse.
I'd try and avoid if you can, Peter. You don't want it to bite you on the backside.
That was the right answer.
Yeah, I would. You don't want to go down that rabbit hole, to be honest. So I'd say try and avoid if you can. So I think that's pretty much it, isn't it, Kendall? Because we've gone over a little bit.
That is it. Yeah.
Yeah, I think you're tired now. You might need to lie down.
I've got another meeting, then a meeting, so no rest for the wicked.
But yeah, thank you for everyone attending. Thank you to Ryan as well from Lake Shield. Thank you for attending. So we'll get everything out by the end of this week, guys. So you'll have the procedure that you'll need to sign and send back. We'll get you the sales process, the fact find, the income and expenditure form, and also any other details around Dropbox and stuff like that will be in the procedure. Has anyone else got any final last-ditch questions? Is everyone good? Quick go. No one's answered.
But no, any questions, please just pick up the phone. Any cases, like I say, we're here for whatever you need or as little as you need. So lean on me as much as you can. And yeah, excited for you all to get going. And I know you've all been waiting for this for a long time. So
I'm really excited for everyone to get to the signed off stage so that my inbox is inundated with business.
Yes.
Come on, guys, show us what you can do.
Cheers.
Fantastic.
Thanks
Thank
everyone.
you all. Bye-bye.
Cheers.
Cheers. Thank you. Bye.